All right. Good afternoon. Let's do an update review for today. Today is Wednesday, August 30, 2023. So we have one more day before one more day trading for the month of August. That's what I'm trying to say. Look at today. We know that today is the day that the GDP data release, and we know that the consensus is 2.4, but the actual is dropped to 2.1. So there's some slowdown in the the U.S. economy right there. And now look at see how the markets react, right? First we see that right here, that's the react right here. It's not big react like CPI or the FOMC. The react right here, the range, the manipulation right here is just this move right there. Boom up and boom down, and then it moved up real fast, and then it moved down real fast. So it's like a roller coaster right there. That's amazing how the algo is run right now. So a lot of liquidity right there. Very interesting to see. But anyway, so we see that on Monday, right? It up. But Monday cup range day, however, a huge volume is what we know in our journal right there. So the Monday 4-hour time frame, both the candle both up close, but it's a range day, but it's with a huge volume. That's the highlight right there, or the emphasis right there. On Wednesday we have a up close, but the volume is low, so very surprised. On Monday we have around 100,000 million share, right? 102 million share, but for I think about 69 or 65 million share for that matter. So it gives us some food for thought right there. And then on the pre-markets, we saw that the prior day high was taken by the Asia high, and then we saw London is breaking down, and then the run high retest, right? The run high is retest right here when the manipulation happened. So take out the buy side liquidity from London, and then boom, it go down, right? You take the buy side, sell side liquidity from here, and you see it's moving up. It take another buy side liquidity, and boom, it pull back right here. So this is going to be a retracement. It's not going to take this, it trap this. You see that it trap all of this buy side liquidity right there, I mean sell side, and then later on you see it wait, and then boom, go down, check all that buy side, sell side liquidity right there. You see that? That's how beautiful the algorithm run the liquidity right there. 6 liquidity, right? Buy side to sell side, buy side, sell side, buy side, sell side. Okay, buy side, buy side, buy side, buy side, buy side, then boom, take out the sell side. So it's just trap all the buy side right here. It wait when it need to go down and take out the buy sell side. So our trade at our job at the trade is very simple: capture those move, those the move that it's gonna take. The run, the liquidity gonna run, so we just follow the run right there. It's like a storm runner. Follow the storm, and it gives the signal before it run. it runs liquidity. So our job is to find out where the signal are located, what time and what location it give us the signal, and then we just follow the signal. Not just flow with the markets. That's an idea right there. It gives me. So we take 2 practice trade today. I think I said 3. The first 2 we get lost, and I think let's see. Let now do a drill down to the detail. Gives me. Okay, let's drill down a little bit. Let's see. Okay. So here the trade we take, right? Here the short trade we take on the M1, which is 1 minute time frame, right? So basically we short right here. Our idea that we saw is, buy side liquidity go rated and sell side liquidity go trap. So we just going in and short them, right? It make our requirement, right? However, the time is not right. We find out the reason why not right because we receive the feedback from the market. This is not a successful trade for it. We go in too early, okay, and we go in too early because you know what? Because we need to see right here. There a long setup is formed right there. You have to let the long setup, which is this auto block. After it take the buy side liquidity right here. I mean sell side liquidity here. You see auto block and you see the fair value gap right here. So it's just a retest fair value gap. So we have to respect the long setup. Whenever we want to take a short setup, if we see the long setup forming, in this case we didn't see. That's why we jumping too early right there. But now when we review that, we see that there are a long setup forming right there. Right, it is the buy side that we're taking. Waiting and all the block for the gap and retest for block, it will go along. So we should have identified this. We didn't, but anyway, it is a short setup for us, so we are learning. Okay, so when we go in around what time? So 39. So entry time is 09:39, right? And stop loss hit about 48. So we stay in the trade about 11 minutes and we got stop out. Okay, so how much we lost? We lost 30 cents, and let's see. Let's go back to the chart and see. So 39, yeah, we going right here, short 39, and we put our stop. Let's say we go in and half of this candle, right? Okay, then we put our stop loss on top of here. So just be, yeah, 52 cents. So let's say we lost 52 cents right there, and we got hit. We got hit at 48. Yeah. So 52 cents. So actually we lost 52 cents. And we got hit right there. Let's see. Let's go back there. Okay, and so we reached 30 cents. 52 cents, and our target is 446.78. So what about 446.78? I want to see what our risk reward ratio. So what is the 44678. Why we put that level in our note right there? Mm, 44678. Okay, I see right there. It's on the 4-hour time frame. It's the very yeah, that's the huge level. It didn't plan out, so forgot it for now. So basically that level is the way down here, so it did not reach that level. So basically we lost 52 cents for that trade, right? That's the first trade we got. The risk reward ratio, I think we did 52, and if it went down, let me see, on a 4-hour time frame, let's put a 4-hour time frame so we are on the same page. Basically we learned a good lesson, you know, right here, how to set our target, right? So basically when we take the short, the very short, we thought that it's gonna go down and retest this one, but we're a little bit naive. You know why? Because it this is our target for a short, very short right there, and a little bit naive. You know why? Because it's short right here and it go all the way there. Let's see what the move it make. It's a huge move. If we expect that right there, so basically we believe it's gonna move from where? This right here. So basically we expect it make a almost $3 move right there. Right. Excuse me. So let's move it in here. So it's $3 move, $2 something like from here. Because I want it to be visible on the 1 minute time frame. Yeah, basically, you see that? Yeah, right here. Yeah, basically we want it to be right here, right? We want the target right here. So okay, we set our inspection right there. It's a practice trade, so we have to improve things better. Let's do this. I want to see. So basically we want the whole down move right there. So that our expectation when we go with a short, and that our risk reward right there, right? $2.92. $2.99. So basically that's what our risk reward right there. But anyway, we that is now I think maybe 1 to 6, right? Yeah, about 1 to 6 risk reward ratio. But look at the stop loss that we are put in there. It's a huge stop loss, and we expect a huge move. But I think it turned out it's not successful trade. You know why? Because it needs to go really up high, not to go all the way down to retest that area. you need a big auto block, right? Look at the 4-hour time frame to see if that logic is there. So basically we go in right there, we want to go all the way here to retest here, but we look at here, we already see that this is already the retracement. If all of this is just go up, there's no retracement, then we can expect that when it open first, for 10-20 minutes, then boom, it go down. But so that means we see that the retracement on the high time frame already take place. It's gonna be a moving up right there. So that will help us to go back and revise our expectation when we take a short trade. So basically our first trade right here, we lost, and we not successful, and we learned a ton of lesson, right? The first lesson we learned is we saw this long setup. We need to let the setup play out, okay? And also when we set the target right here, it's not reasonable, so it's not a good trade for two reasons with that. First reason is that a long setup need to play out. That means it need to take out the buy side liquidity first. Even though we see that there are lots of sell side liquidity drop right here, right? But the market it set a trap right there, so we're going early. Let's keep it simple right there. All right, so we lost 52 cents. It's a practice trade anyway, so we lost 50 cents. Let's say we lost 52 cents. And here's the second we going, and it looked like a good trade also, and we have a reason to come in. Let me open that. Okay, it's the second short trade we take. Practice trade, did perfect. I mean, we have no regret for this one, right? Because it's already moved up, and now it create the fair value gap, and fair value fall into this time of window after 10. So it's perfect for us right there from 10 to 10:30. If there's something fair gap open and we see the order block, we can go in or short, and we go in at 10:08. That's the setup we had. We had a buy side liquidity were rated right here, right, and sell side liquidity were trapped, right here with a drop right here, and trap all the way here. So yeah, I mean, it's just the buy side. The sell side is not trapped yet because it's right here. It make a lower low right here, so it's not completely sell side will drop. So that's the reason why it turned out it's still a unsuccessful trade for that reason. And we target the buy side liquidity right here, around here, right? And our stop loss is 50 cents up around here. All right, let's see what is the outcome of this trade. It turned out a loss trade also, and we got hit. I think I did took the screenshot when we got hit, but we got hit just how long? Actually, we got hit right here, right? We got hit right here. 10-12, we got hit at 10-12. Because we go in here at 10:08, and then we hit at 10-12, 4 minutes after. entry time is 10:08. Is that 10:08? Let me make sure we got it right. Yeah, 10:08. Yeah, 10:08. That's where we get in short term. And stop loss hits at 10:12. And we lost 20 cents. So right here. So here's our right up right there. It got hit and we lost 20 cents. And our risk reward is 1 to 4, so it's a good trade for us. But it see now it's not. The lesson learned for us is lesson learned. Well, the lesson learned for us is, you know what? Right here, we have to watch carefully right here. We don't go in when the market structure shift, when market first structure shift, right? We go in when right after the manipulation move, or at the manipulation move, if we want to say that. What happened? Oh, okay, I think I still use a pointer right there. So basically right here, as soon as we see the market structure shift, it needs to make a high low, right? But right here it make a low. Right after it make a low, we're going and short right away. No. Yeah, don't do that. You wait for this manipulation move right here. That's where it happened. And that's lead us to the third trade that we take right here. Even all of them just practice just practice right there. So this trade we don't know what to call this in terms of the order block, because we don't see any failure gap when we go in here. When we have a failure gap, but we don't see any little retest. We see order block, but we don't have a retest going. So we don't have the fancy, we don't have the luxury, entry with a retest. We don't have it. So we have to take more risk, or we have to take a different approach. And the wisdom flow and the name, I think we're familiar with the system that we can double top or failure test or total stop right there. And how do we observe this setup? Okay, so first we see that on the 1 hour time frame right there. So here's what we do the write-up for ourselves, right? We see the buy side liquidity was trapped. We see right after the market structure shift right here, it make a lower low. It's not supposed to make a lower low. It's supposed to make a higher low, right? Because it rally, right? But as soon as we saw it take a high low, then we know there's something right here. That's the market structure shift. It could be so-called liquidity wrap, right? But in here it tells us it's market shift because it also have this phenomenal buy side liquidity was trapped, and also sell side liquidity was trapped like that. Both of them trapped. And then this is the manipulation move right here. It manipulates this one to take the buy side liquidity, and as soon as it take the buy side liquidity, we know that we have a short setup. We have to go in. Everything right here, we put an order here. So we enter on the leaving of the order block, this one. of this order block or this order block and leaving going. You don't have to go wait for retest. You know why we don't have to go for retest? Because it already grabbed the buy side liquidity. It already trapped the buy side liquidity right here, and it grabbed it. So it's not going to retest for you. So there's no retest on that. And the targets for us is the conservative is right here, is right there. Conservative, level right there. But it turned out to go deeper than that. So we try to generalize these conditions. So next time we can identify this when it shows up in real time. And also we can see that it fall into the so-called supply range, high time frame, 4-hour time frame right here. We already identified that this morning when we do analysis. So it's the 4-hour time frame buy side liquidity, and then the bearish order block. This is the the supply range right there. I think I mixed bearish supply right there, but the idea that this trend is the bearish order block. So when it go in here, people will short them, and you see that that's exactly happened. You see that it go beyond our first target. It go all the way deep here. It's about $2.62 right there. And how much we reach? We reach 27 cents. So it's a huge lesson learned for us, and we identified this. And the entry time window for us is about 10 to 10:30. So we, in this particular case, the entry time is exactly around 10:15. But we try to generalize the condition, right? So it's if this setup show up in this time window, then we keep at a very high probability to going. And the risk reward is very high, 129 right there. You risk only 27 cents right there, but you get $2.69. So we can recover all our loss, right? 52 cents, 22 cents, so it's 72 cents, but we get $2 back. So we will gain around $1.80 right there, or 90 cents right there. So. And this trade is just short trade, easy trade. Just remember the easy trade is the best trade. Yeah, there's no argue about that. It's very low resistance liquidity run right there. It's a very clean move. I think I need to slow down myself a bit. I go too fast. I twist my tongue right there. So just put it in our brain. So easy trade is the best trade. Just remember that. Easy trade is the best trade. You don't have to be so difficult, so hard. Just take it easy, and the market will present you the easy trade, and take it. It's right on your lap. Don't try to force trade. Don't try too hard. So easy trade is the best trade right there. Okay, so after, I think we have one more minute. After we do all of this trade, I go back and I saw one setup right here. We should see that, on when it start opening today, and it fall into our logic that when we try to short, we have to look at the long just to see if there are long setup right there, and let it play out. And that exactly, you see this order block right here, you have failure gap right here and retest. So we have to let this long to play out. You remember we tried to short right here right away, but we forgot to see that a long setup right here, and let it play out. Let go in and take the long. Right along, and then go in and write a short, just in and out like that. So That is our job right there. We have to be in perfect harmony with the markets. That's what we try to do right there. So right here, it's a short, a long setup right there. Order block for the gap. Look at what we just put 10 cents below the retracement right here. Oh, okay. And also this setup very, coincident with another so-called factor in that. This is the manipulation move, right? When the big news come out, then we need to draw the fib right here, and we see that if any time it go below the 50, you see people go and buy it. So right here is the last time before it tests the 50, and it's a last retest. We need to go in right there. So it's called it have many confluence for us, right? It has sell-side liquidity rated. You see the sell-side liquidity were rated right here. It right here. This guy right here, right? And then you have buy-side liquidity trap, sell-side liquidity rated right here. Right here. So you have that, and then you have a manipulation move, 50% retracement rule right there. So you have two big factors that coincident or that provide a confluence. So this means a very high set right there. And our entry time is about 9:41. It's about right. And then we just push the stop loss below after that, and we have a huge rise right there. So that's the one upset. I think we mixed this morning, but I'm glad that we are gonna see it now. Just remember this manipulation move on the GDP data release right there. It gives us a background, the environment that we need to operate right there. And the targets is what? It's gonna be just one standard deviation right there. So it's about 200 right here. It's 200 right there. Yep. Let's look at the charts. We can see better, right? Let's do this. No, I do it wrong. Right there. So basically the target right there at the one standard deviation, 955. All right, I think that's good enough for now, and talk to you later. Thank you. Bye bye for now.